Thank you for attending this lending event. We have quite a few people to present to you today. My name is Linda Grove. I'm with the Small Business Development Center. Some of you I've met before. You'll actually receive an email from me probably by the end of day tomorrow with all the presenters from today and some of the materials. So I'd like each of you to respond to that email with, what one thing you want to work on or where you're at in your business so I can possibly help you. We're free advisors. There's one of us in every county in the state. I actually cover about 4 counties. So we're free advisors, which means we're really, really popular. So please nag me if you don't hear back, but we always have about 200 clients each. But we can advise. Unfortunately, we can't do the work for you. If you're going to own a business, you're going to be doing a lot of work. So I was self-employed for 17 years, and that meant 24/7 for 17 years. So I'm happy to not do that anymore. Now the weekends I can actually have off. We are all funded, most of us in the room are funded by the Small Business Administration, and we have Solomon Wheeler here today, so he's going to do an intro on what the SBA does in the area, and then we'll move into the specific lending portion. Okay? Solomon, you want to click?
Good afternoon to everyone. My name is Solomon Wheeler, and I am the Harrisburg branch manager for the SBA. I'm just going to basically kind of give you a brief overview of what the SBA does, and then hand it off really to your subject matter experts. And certainly as we go through this, maybe you can begin thinking of some questions that you might have and how to get your business financed. So I've given you all one of these beautiful colored resource guides, and everything that I mentioned today is going to actually be in this resource guide. If you haven't heard this before, we always say the SBA is a federal agency that has a mission of helping Americans start and grow businesses. So it's a very noble mission. It's a mission that I love. My background is in banking and economic development, but I can't think of anything more important than to really help individuals get into business. Who knows the official number of businesses in the country? It's a big one. 28 million, I'll tell you. 28.5 million. That's the official number. So the SBA is 3 C's and a D. 3 C's and a D. Okay, and we're just going to go through those real quickly, right? So we've got counseling, capital, contracting, and the D stands for disaster assistance. I hope you never need it, but certainly that's one thing that we do. So let's just deal with counseling. The SBA is about $1 billion agency, so we're taking federal tax dollars and sprinkling them throughout these organizations that are doing the real heavy lifting. So our 3 technical assistance resource partners are small business development centers, of which there are 18 centers in the state of Pennsylvania. Kutztown University is one of those centers. We deal with SCORE chapters. That's a national organization of volunteers. These are seasoned business folks that have raised their hand and said, I want to provide free mentoring. Susquehanna SCORE is our closest SCORE chapter. And then there are the women's business centers. There are 3 in the state of Pennsylvania. There's one in Philadelphia. The one that's closest to us is Assets Lancaster. They do some of the same type of technical assistance, but they try to tailor their program to women entrepreneurs. And then there's a women's business center in Pittsburgh. So all of these organizations help you write business plans. They help you do projections. They help you think through what your website should be doing in terms of social media and SEO, search engine optimization. So anytime you need help with assembling projections, thinking through your marketing strategy, figuring out whether or not you have customers in Japan, the idea is that there's expertise, and Linda's back there. I've known Linda for a long time. She does a wonderful job. There's expertise at all of the SBDCs to help you put together a cohesive strategy. It's been proven in all the white papers that if you take time to plan, it's going to improve your chances for success. Does that make sense? Okay, so that's counseling. We're providing funding to these organizations, and they in turn are helping and meeting with small businesses day in and day out. The second C is capital. We do not lend directly to small businesses. We have a policy and program we put in place of lending programs, and we basically put this policy in place, and we say, okay, banks, credit unions, you stay within the guardrails, and as long as you play by the rules, there are times when you can reach into your tool bag and pull out a loan that is guaranteed by the federal government. They typically do that when they have a situation whereby they like the cash flow, they like the management. They would want to do the loan, but there's a little bit too much risk. So a banker will typically say, well, I can't do this loan, therefore, unless I had a guarantee, so therefore I'll reach into my tool bag and pull out a loan that has a federal guarantee. That's usually invisible to the borrower. Many times the borrower doesn't even know this. So if you're, Joe's Pizzeria, you can go down the street to M&T Bank and you say, I want $200,000. M&T Bank says, we love everything about you. We love the numbers. We love the collateral. We're just going to do the loan commercially. They never have to involve the federal government. They may say, no, we don't do startup pizzerias or whatever it may be. That third scenario that I was trying to describe is that there's a scenario in which the collateral might be weak. You may be a startup. There may be some things that the bank is concerned about in terms of whether or not the risk of a continuing operation. But the point is that they're able to potentially use SBA as a way to lower their risk. Cash flow has to be there no matter what. And again, these gentlemen will get into the details. So there are about 112 banks in the 40 eastern counties that do SBA lending. Our flagship program is 7A. Many banks in here are approving loans. We did over $500 million in SBA loans last year, 2018. That's an all-time record. There's a breakdown on our website by county of the number of loans and the banks and the amounts. So the data is available. We have a listing in this resource guide by county. I would encourage you to start with your own bank, but there are many, many good banks out there. We can connect you with the individuals, and this is the purpose of this type of an event, so you can meet folks and build relationships. You still have to go through the front door, put an application in, do all the stuff you have to do for getting a bank loan, but the point is that this helps hopefully lower the stress and lower the barriers in terms of understanding how the program works. So there are 7A loans, there are 504 loans, which are economic development loans. You're going to hear about that. There are microloans, typically loans under $50,000. Community First Fund, they're excellent. They're here. They're going to talk about microloans. The point is that as an entrepreneur, you're just trying to find the least expensive money available, right? Think of money as a product. The idea is just give me the cheapest loan possible in terms of interest, and hopefully that's the thing that you're able to secure. I am agnostic. We are agnostic as an agency. We want you to do what's right for your business. You should not take a loan if you don't have the ability to pay it back. If you can grow your business organically, right? You've heard that term before, with a customer base. That's even more important. You should be doing that. But if financing is necessary, whether it's a term loan, working capital, etc., this is hopefully another option for you. Okay, so we got counseling, that was capital, and then there's contracting. Contracting essentially is businesses that want to sell something, sell stuff to the federal government, whether it's a product or service. The U.S. federal government spends over $500 billion, right? One of the world's largest customers. They spend $500 billion a year on goods and services. 23% of that is mandated by Congress to be spent on small businesses. So if you can just get yourself one sliver of that, 1/10 of 1%, it could be a $200,000 contract. So there are people within the SBDCs, within procurement technical assistance centers that we help fund, that can help you navigate the bureaucracy of going after a federal contract. There are bid match systems that you can look at. There are ways in which you can position your business by making sure you build a profile within the system for award management, making sure that you have a capability statement built. But there are individuals, and Linda's one of them. She's a government marketing specialist. She can help you understand how to do that. Under the contracting umbrella are different certifications that you can pursue. Women-owned small business, service-disabled veteran-owned small business, socially disadvantaged business. There's an 8A program. All of these certifications, there's HubZone, which is basically historically underutilized business zones. All of these certifications will not guarantee you a contract or business, but it will give you a preference at different levels, right? There are different metrics that individual contracting officers are pursuing, and the more boxes that they can check off, woman-owned business, service-disabled, veteran-owned business, the more boxes that they can check off, the more competitive you'll be. By having a certification, you're basically shrinking the pool of competitors. Does that make sense? So I used to work in the 8A program. The 8A program is a business development program. It's a little more robust than some of the other certifications. It's a 9-year program that you're involved in. I would encourage anyone that thinks they might be eligible for the program to look at it. It is CFR Title 13, 124. It's available electronically. Those are the rules of the 8A program. The point is yeah, sure. Title 13, 124. Those are the rules of the 8A program. And again, they're all listed in this resource guide. So we've got counseling, capital, contracting, which is an opportunity to sell to the federal government. And I should mention, in particular, the government buys a ton of construction services, anything in the trades, masonry, electricity, plumbing, facilities management, anything in IT. We're spending billions of dollars in those areas. So there are areas in which we're spending more money than others. You have to qualify as a small business, and we normally use what's called a size standard chart. I'm not going to get into the details, but as long as you're below a certain threshold based on your NAICS code, then you're considered small. That size standard chart, about 96% of all small businesses of that 28.5 million would qualify. So for example, construction management, the threshold based on revenue is 33.5 million the last time I checked. As long as you're below that, you're considered small, which means you're potentially eligible for a government contract. Okay? And then finally, I'll just wrap up with the D, right? I said 3 C's in a D: counseling, capital, contracting. The D stands for disaster assistance. I hope you never need that service, but it's the only time in which the SBA will loan directly to an individual. I did work in Florida and in St. Thomas, basically making loans and doing public affairs for SBA disaster assistance. In some areas, folks got wiped out. In St. Thomas, there are 110,000 people. In St. Thomas and St. Croix, we put 47,000 people through the system. And that's FEMA and SBA. FEMA's on the front end. They keep you dry, they keep you alive. SBA is on after FEMA. If you have the ability to help yourself recover, you're not going to get free money. You're going to get a loan. And that loan is typically up to $200,000 to repair your primary home and up to $2 million for businesses to repair their physical or help support their economic damage. So disaster assistance, again, is something that is detailed in the resource guide. Pennsylvania, it's usually flooding. It's all of the flooding that occurs from all the tributaries from the Susquehanna. Again, I hope you never need it, but it's important to know that it's available to you. Okay, so I'll stop right there. Does anyone have any questions about what I mentioned? And again, these gentlemen are going to go into the details of some of the programs that are available. My door is always open. My business cards are here. I'll leave some here. I'm on page 5. If you ever have any questions, I'm always willing to talk or to even meet face-to-face if you want to have a discussion about what you're trying to accomplish with your business. Again, my mission is to help Americans start and grow businesses in the 13 counties out here in central PA, so I'm available to you whenever you need me. Linda.
Thank you, Solomon. I appreciate, and you mentioned he has an office right here in Harrisburg, right?
I'm right down the road. I'm 2 minutes, that way I think, 2 minutes. 2601 North 3rd Street. I have some business cards.
Hi everyone, again my name is John Cherry. I'm with the Harrisburg Regional Chamber of Commerce and CREDIC. I'm here to talk to you today about some resources that the Chamber has on the Chamber side, as we are a Chamber of Commerce. And then we also have an economic development corporation within the chamber to talk about different financing options for your business. It's really just a great day here to talk about entrepreneurship as well as small business creation. With the chamber side of the shop, you know, it is a great location for spreading the word about your new company, as well as gathering small business knowledge through connections made through our various functions and various connections that you can make at any of our events. We are with the Chamber of Commerce, we deal with a wide variety of different businesses, from mostly a lot of small businesses with just a couple of employees to some of the major businesses. So don't just think that we are catered to the larger businesses. We do have some local businesses with the Chamber of Commerce, so that you know you can make those connections, and we're free to connect you with any resources that you have there. On the CREDIC side of the shop, CREDIC is the Capital Region Economic Development Corporation. We're a nonprofit organization. We're economic development arm, as Solomon was saying earlier. We are certified by the state as an economic development corporation to provide low interest financing through both the state as well as we partner with a sister agency to administer SBA 504 lending programs. I did hand out a flyer which goes over some of our resources. I'll connect with you that just came in just a couple minutes ago. But there are really some great benefits to partnering with CREDIC in terms of getting financing through there. We do offer low interest rates. Right now our interest rates are roughly averaging about 3.5%, which overall lowers the overall payback in terms of a loan that you're getting. We also provide stability in the financing that you're looking for, in terms of, with a bank going conventionally, the interest rate varies every few years, but with going through a CREDIC or state loan or a federal government loan, you get that stability in terms of the interest rate is set for the life of the loan. And those terms can last 15, 20, 25 years. So having that stability is great as you're projecting out your finances, projecting out everything else. And also keeping cash in your pocket to reinvest in your business. The average equity injection in terms of a loan that's required is 20-25% going straight conventionally, but bringing in CREDIC for a PITA loan or through 504 loan provides that stability in terms of we only need a minimum of 10% equity down. So having that cash, the cash difference between what is needed through a conventional loan versus a CREDIC loan, you can use that money to reinvest in your business to have that cash flow as needed as well. So again, I have some flyers that I passed out. All of our loans here, we partner with various banks to administer through local banks such as M&T or whatnot. We also work with the Community First Fund in delivering these programs as well. So I do have, is there any questions as through this? Go ahead.
You talked about the two different loans, the 504 and the PITA loan. Can you go more into what they are?
So with PITA and with the 504 loan programs, there are a lot of similarities in the types of businesses that we can provide loan financing to. With the differences in what can be financed through PITA, through the state, versus what can be financed through the 504 loan program. With the state loan program, there's a little bit of, you can't finance as much through there, but primarily it's all of real estate acquisitions, new constructions. Those are the primary ones that we see a lot of. With a 504 program, you can kind of incorporate a lot more of what you're looking to finance into that bucket as well. So another variance between the two is the amounts that we can finance. PITA is, you can go up to $2 million for a PITA loan, but with a 504 loan program, when you think of small business, you think of like a small little mom and pop shop, but with a with a SBA, you can go a lot larger than that. So,
Was there one more question?
yeah, go ahead.
Do you have specific areas that you support, or it's just any business?
So, it depends on the type of business that you're looking to start up, but we cater to just about really any business within. We serve 3 counties, Dauphin, Cumberland, and Perry counties, and we can really cater a lot of different businesses. And I suggest that with the flyer that you reach out and we can have that conversation of what exactly you're looking for, the needs, and then how that we can best serve you.
Is there one more question or no? So John, when's the next networking event at the T-shirt?
So we host monthly business after hours. We have a business after hours event next Thursday at the Harrisburg Country Club. And so we have a business after hours. And
So networking?
yeah, it's a networking event. You'll meet a lot of different businesses there. And I would suggest on the flyer that I handed out to everyone that there's a website, the Harrisburg Regional Chamber's website, where you can go. The first 2 events are free for you to attend. So I really encourage you, if you want to connect with various local businesses, just to talk shop, come on out.
So we do have a representative from the city of Harrisburg today. Thank you, Shashan, for coming in. If you can come up and say hello to everyone. She already knows everybody. Okay. How many people did you bring with you?
No, they're superstars in their own right, so that means I'm in the right place. So good afternoon, my name is Shashan Dial. I do serve as the Director of Equity and Affirmative Action for the City of Harrisburg and the Staff Liaison to the Harrisburg Human Relations Commission. So I bring you greetings on behalf of the city. Just want to give you a couple resources and some transparency. So currently, our Director of Business Development, it was a position that was held by Mr. Charlie L. White, Jr. He has gone on to the Commonwealth, so that's a come up, right? And so he is lending his talents and gift and passion for entrepreneurship to the Department of General Services, the Bureau of Diversity and Small Business Initiatives. So that means currently that position with the city is open. So number one, if you know someone who's interested in serving as a Director of Business Development for the city of Harrisburg, they're passionate about entrepreneurship, small business, they need to go and apply. You can do that on Harrisburg, PA.gov. And on the left-hand side is how you navigate it. So you can click on careers and see all of the open postings. And that's anytime, all year, 24/7, you can see what the positions are. So that's one side. The other side is that there are still very good resources on that website. The only thing is the contact information is outdated. It'll still say Charlie L. White, but we have our certified business link there. So clickable links to all of the third-party certifications. So Solomon already spoke about that as a business owner, you can decide when in your business cycle it is advantageous for you to get a women business entrepreneur enterprise, or if you fit any of these categories, there's small business, there's women, there's disabled veteran, there is an LGBTBE certification, and they're all third-party entities. So it means you go there, submit your materials, and then you get a national certification. So we have all the clickable links already ready on the website, and so you can just go there and do that. Yep, I'm gonna give you some more information. So in the meantime, since the city doesn't have this position filled, I am not the official interim. Our senior management has not appointed that, but if you just have some questions, I believe face-to-face, right, is important and helps us get over these barriers. So you can call me, 717-255-6471. That's 717-255-6471. You can also email me at ssdial@harrisburgpa.gov. That is S as in Sam, S as in Sam, D as in dog, I as in igloo, A as in apple, L as in love, at harrisburgpa.gov. And I will do whatever I can to navigate for you, connect you to the information you need until the city is able to full-time fill that position. I do also want to encourage you to connect with our other chambers of commerce. So there is an African American Chamber of Commerce. Lots of resources, amazing people. The leadership of that currently is Leland Nelson and Sharia Serrano, just to name a few, the president and the vice president, another source for you. And then there is the Keystone Business Alliance, which is formerly known as the Gay and Lesbian Chamber of Commerce. So there are a lot of entities out here that are more than willing to connect you to information, answer general questions, because there is no silly question. And there's lots of lingo that is used, micro, business versus a small business, or there's startup and business development, and then there's business elevation, right? So businesses that are just starting, and then businesses that are trying to elevate where they are in the game. So find and tap into these resources and be sure to ask questions. So again, call me, email me. Congratulations for being here, and go get it. So claim mental, physical, spiritual, and of course, economic health and wealth. Thanks, Linda.
Thanks so much for coming, Shashan. Okay, so now you have 2 invites to a networking event for free, and you have Shashan's direct dial number. And as of tomorrow at the end of the day, you'll have all the contact information of everyone presenting. So about the Harrisburg Loan Fund that you came in for today, we have 2 presenters from the Community First Fund. So first I'm going to introduce Ken Hamaker.
So my name is Ken Hamaker, and I'm with Community First Fund. Community First Fund is a little bit different. We're what's referred to as a CDFI, a Community Development Financial Institution. So that's a mouthful, but how that's different from a bank, which is a nice easy short word, is that all we do are business loans. So we do not take your deposits, we don't do credit cards. Our particular CDFI only works with business loans as well. So unfortunately I can't help you if you're looking for a home equity, or you want to purchase your first house, or an auto loan. We are solely business for our CDFI. Our CDFI covers 15 counties. So I cover Dauphin, Cumberland, Franklin, and Perry counties. So we kind of start there and work our way east all the way to Philadelphia and north up into Scranton, Allentown area. So we cover a pretty big territory. We're headquartered out of Lancaster. We have about 45 employees in total. But we've been around for 27 years, and we do probably about close to 200 loans per year. So we're not we're a small institution compared to a Wells Fargo or a PNC, but we are actually a pretty decent size when it comes to central Pennsylvania for the amount of volume of loans and stuff that we do. I myself have 27 years in the banking world. The first 23 were with 23 and a half were with various institutions like PNC and M&T that have been previously mentioned. For the past 3 years now, I've worked with Community First Fund. So again, kind of getting back to how we're different. We're a nonprofit, but we're also mission-based. So being a nonprofit, we have, our particular mission is what we would love to do is we want to help end poverty. And by doing that, it's by getting capital into the hands of business owners who otherwise may not have had access to gain capital. So we often do the loans that the banks don't want to do or the banks won't do. One of those is startups. Banks want to be able to see 2-3 years of historical numbers before they're willing to give you money. They want to be able to say, hey, I can see what you've done as opposed to what do you think you can do. So we will work with nonprofits. We work a lot of times with startups that we get some assistance from the SBA. Solomon, who you taught me, where we get an SBA guarantee. Like I said, we also will work with nonprofit groups. It just has to be a business. It can be a sole proprietorship. You don't have to go out and form a new LLC if you don't want to. We can work with any type of business entity. So some of the things, we do any types of term loans, mortgage loans, lines of credit. Like if it's business related, we can assist. So where we come into play a lot also is in helping those lower income communities. So mostly those are cities, City of Harrisburg, City of York, City of Carlisle, City of Chambersburg, further east, City of Lancaster, Reading, etc. But we also do rural areas, so there's some lower income areas in northern Dauphin County like Pillow, or in Perry County, out towards West Perry area, things like that. But we also do loans outside of those areas. I have done loans for Community First Fund in Hershey. I've done loans for Community First Fund over in Camp Hill, which are not considered low-income communities. So it doesn't have to be a low-income community for us to assist, but what gives our organization the greatest impact is when we're working with businesses or business owners who live in a lower-income community, or women-owned businesses and minority-owned businesses. That's where we kind of get the most impact from what we're trying to accomplish. So one of the reasons that I wanted to come here today is talk a little bit about what's called the Harrisburg Business Opportunity Fund. So financial institutions love acronyms, so this one's HBOF, which is kind of silly to say. So, but where this fund came from was Impact Harrisburg is an organization set up here in Harrisburg to help get businesses operating and running within the city limits. And together with Harrisburg Impact and Community First Fund, we put together this HBOF fund, which it's not different in that it still has, we have the same lending criteria, which is some of what Khalif is going to talk about here shortly with regards to how a loan gets approved and so forth. But where the benefit comes from is with this particular fund, we have an interest rate of 5% that we can give out to business owners. So that 5% money for businesses is for up to $100,000, and for real estate up to $200,000. Now the criteria for that is that the business does have to be within the city limits of Harrisburg. So if your business is in Colonial Park, that doesn't mean Community First Fund can't help you and that we're not going to give you a loan. We'll still do that. But in order to qualify to get the 5% interest money, it does have to be within the city limits of Harrisburg. So I just want to make sure that that's clear for everybody with regards. But like I said, it can be used for purchasing property, purchasing equipment, leasehold improvements, refinancing existing debt that you're paying that's currently higher than the 5%. We are trying to help businesses that are going to bring on some additional employees, for the same reason. If we provide money to you, you hire people, ultimately you're now paying those people, those individuals are being able to put money back into the community as well because they now have a paying job, and then hopefully your business grows even more and you have to hire more people, and then we have a nice good cycle going that helps the businesses within not just Harrisburg but within all of central Pennsylvania. So I think that's there's a flyer that I'm holding in everybody's folder that just kind of breaks down a few other details. We can go up to 10 years with that fixed rate. We do ask there needs to be a minimum of 10% put down on the project. And really that's, the rest of it's just our regular standard credit guidelines. So does anybody have any questions first off regarding the HBOF fund? Yes, ma'am.
Do you need a business plan in order to go through this process?
Yes, so again, we go through our normal credit criteria as to how we would determine if a loan is approved or not. And as part of that, especially if it's an existing business, like if you've owned your own beauty salon for 10 years, then no, you would not necessarily need a business plan. But if it's a startup, then yes, we would require a business plan. Yes?
Startup, and so you said possibly if you've been in business 10 years, or if you're a startup, but what if you've been in business like 2 or 3?
2 or 3 years, I guess it would depend. You wouldn't probably need as detailed of a business plan, but we would still want to know a little bit about the background of your business. We would want to know, like your resume, your management experience with regards to that, and then definitely some projections, at least 1 to 2 years of projections. In particular, if our loan is providing something that's going to help you grow that business. So if you're buying a piece of equipment that's now going to enable you to bring in this many more new customers, then having those projections to show how the benefit of providing that capital for you to buy that piece of equipment is going to overall help everything. But, and when I say I don't want to scare people with the business plan, we have a great resource named Linda back in the back here. And the SBDC will help put together those business plans along with some other technical assistance we will provide as well. And SCORE, as Solomon mentioned earlier, that the SCORE is another institution that covers here in Harrisburg and York counties. that helps put together business plans or goes through and helps you with those projections. I mean, a lot of times the paperwork can be a little scary when you see what financial institutions want. And so, I mean, our job is that, we'll walk through that with you. I mean, we can't sit and type up your business plan, but we can help answer questions. And like Khalif and myself, we will do that on a one-on-one basis. So we want to try to make this as easy as possible, but again, we can't write it for you. Any other questions on the fund? Yes?
I do have another question about being in Harrisburg. Like, for instance, I run my business out of, I live in Susquehanna Township.
Okay.
But the majority of the business I do is in the city of Harrisburg. So does your business location have to be in Harrisburg, the city limits there? I know.
Yeah, that could be a little bit of a gray area. I'm going to give you a definitive answer on that. I would need to check. If the majority of the clients that are coming from Harrisburg, it might qualify. Again, definitely Community First Fund would be interested in assisting you. Just might not be able to do the 5% HBOF rate that we have. Yes, sir.
What's your current rate apart from this?
So our current, it's case by case. So it depends. We take a look at the overall risk of the package of information. So depending on, again, how many years experience you have, what your personal credit score might be, what your tax returns look like, what collateral is available for the deal. Again, stuff, I'm going to steal a little bit of Cleve's thunder here, things that he's going to be covering. That's kind of how we get around to what the end rate would be. But to give you an idea, we're typically about 2 to 3% higher than banks. So if banks are lending money at 5 to 6%, we're lending it out at 7 to 9%. And the reason is we don't have that internal cost of funds. We don't take any deposits, so we don't have that source to use as lending. So we're getting our money, the bulk of it is coming from institutions like Wells Fargo, PNC. We have to pay them a 2 or 3% premium to use their money in essence in order to lend it out. So kind of as I sort of started out with, our organization is really, probably 90% of the businesses we work with are businesses that traditional banks are not interested in lending to. So you get turned down, you go to a credit union, they say, sorry, you're a startup, or sorry, it's an industry such as a nonprofit that they're not interested in working with. Come to us. Really, there's very few industries we won't do, unless it is something like we're not going to do gambling, we're not going to do a check cashing shop, and anything that would be, I don't know what the right word would be, but we're not going to do like a gentleman's club. We're not going to do a nightclub. We'll do a restaurant that does serve alcohol, but we're not going to do just a bar. There needs to be a larger component of food than alcohol. But other than that, we pretty much will work with any business. Anybody else with questions regarding the fund or Community First Fund itself?
So you would fund a construction in the city?
Yes. Yes, we do construction loans. Renovation, and that's another area that a lot of banks are not interested in, are investment properties. So we will work with that. Again, it can't be your primary residence, but if you're purchasing a 2 or 4 unit investment property in Harrisburg, especially if it's one that has been vacant for a while or one that's really blighted, and you're going to go in there and you want to borrow some money plus put some of your own equity into renovating it, fixing it, turning it nice so that it then becomes a nice affordable, rent space for a tenant. Yeah, we will do those. We do a lot of those types of properties. And again, I will say, from having been in the banking world, most banks and even credit unions kind of shy away from that type of loan. No. Anything else? If not, all right, I'm going to introduce one of my co-workers, Khalif Coates. He is a management trainee with our organization, and he's going to talk a little bit about the 5 C's of credit. And those 5 C's are kind of the baseline of what a financial institution is looking for when it comes to will we approve a loan or won't we, and why they're significant and important. So,
thanks, Ken. I'm going to turn this light off so you guys can see the screen a little bit better. Yeah, like Ken said, we both work with Community First Fund. It's great to work for a place that puts such an emphasis on impact other than just return. So This is really the meat and potatoes of why you guys came. You guys are all here because you probably want to finance part of your startup. So the 5 C's of credit are really what lenders look at when they're in the approval process of a loan. So there are many different ways to finance a small business. You could do it by your own personal funds. You could go through a more traditional bank or a CDFI such as Community First Fund. You could go with our friends at the SBA. And then there's microloans as well. Or you could even go with angel investors. There's private equity funds. There's public offerings. And there's even something recently that's really caused some wind, which is crowdfunding. So there's lots of websites like, what's the big one? GoFundMe. That's a big one. So there's just a lot of conventional ways to get financing for your startup nowadays. So right here in the center, as you can see, the first of the 5 C's of credit is character. And just like most things in life, character really dictates the overall trajectory of where you're going to go. In this character, it's described as an important factor that affects credit eligibility in the character. So in this C, we really look at your credit. We look at your relationship with your bank. Have you actually paid back your loan when you said you're going to pay back your loan? There's many aspects to character. It's not just who you are as a person. It's not just who you are to your community, but it also does take into consideration your credit score and how you paid your past lenders. Is there anything you want to add to that?
Yeah, so credit score, of course, is one of the things that a lot of business owners and individuals end up getting declined when they go to a bank, maybe because their credit score has been not real strong from in the past. Community First Fund looks at it a little bit different. We don't just say, okay, you've got to hit this certain number or we're going to say no. We're going to take a look as to what the number is and why that occurred. So if you had, for example, a medical situation or a divorce, those are 2 of the key ones that can really hurt somebody's credit. And those things occurred, 3 years ago, and since then you've been making all your payments on time, but you just never got some of that stuff cleared away or cleaned up, or your ex-spouse, just completely ruined a lot of things. We will take a look at that and say, okay, there's mitigating reasons why this occurred, so let's talk through them, and we can oftentimes work and make something get approved that, a traditional bank's going to say, nope, you're below 680, we just can't help you. We take a look at the credit, but we're going to look more at where you stand today. So if you're coming to us today and right now you're 3 months behind on your auto loan, you're 2 months behind on a student loan that you had, and AT&T is after you, then we're probably not going to be able to assist either. But if these are things that had occurred in the past, or it was just one recent, you completely forgot about that, the credit card bill, you thought it was ACH'd and it didn't come out of your account properly, we're not going to not give you a loan just because of that. So again, we can be a lot more flexible when it comes to the credit piece.
Great points. And that is the great thing about working with an impact fund, is that we don't have the strict guidelines around your credit score, because we all know that, like Ken said, there's things that can happen in your life that affect your score in a way that's just not fair. So we really look at it as 1/5 of the overall approval process. So next we have capacity, and capacity is pretty much described as your ability to pay back the loan. So we look at your current employment. We look at your W-2s from that. What are you grossing every year? How are you paying your bills? Will you be able to pay us back? We look at that overall ebb and flow of your own personal cash flow to see, can you fit this in your budget, and will you be able to pay back this loan? And a key ratio that lenders look at is the debt to income ratio. So typically, you want to see a DTE, debt to income ratio, to be should be around 30 to 35%. That's like average. Anything above 40 is considered like an added risk. So we want it to be right in the sweet spot of 30 to 35. And another thing that we look at with capacity is, and it can be in cahoots with character as well, but I'll keep it in this category. So your work history, has it been consistent? Have you been known to work with one company and then jump to the next with lulls of unemployment in between? That's something about capacity that if you have moments of your own personal financial status where you don't have much equity in yourself, is that ultimately affects your capacity to pay back this loan. Next we have collateral. Next we have collateral, and collateral can be really chopped up in two different ways. There's secured collateral, which is a tangible asset that the lender will seize in the case that the borrower defaults on the loan. And then you have an unsecured collateral, which is pretty much a line of credit or a credit card that a bank may issue to a patron. Another part of collateral would be, this is when we use our friends at the SBA, when a certain borrower, potential borrower, comes to us and says, hey, I don't have the collateral to exactly have that confidence in the bank size. So that's when the SBA steps in and they will guarantee part of the loan or possibly the full entire loan. And then we also do that with CDFIs. Is there anything you want to add about collateral? I think I hit on. So now we're moving on to capital. And capital, as we all know, is just money that you have on hand. And banks love to see that you're willing to put your own funds into this investment. And I have a funny story. So when I was in high school, I would see all my friends' parents, and they would buy my friends' cars. And I was a little jealous, and I'd ask my parents, when am I going to get my own car? And they said, probably what you're thinking, we're not going to get you a car unless you put some money into it yourself. And banks are the same way in that case, because when you actually have your own money in something, you treat it with that much more respect. You want to see it succeed that much more. So banks want to see that. They want to see typically 10 to 20% down on your overall loan amount. And I think that pretty much hits on capital. And conditions. Conditions is the last C. Conditions is at the very bottom because considering that you've done the first 4 C's very, very well, your conditions will definitely be more favorable in your eyes. So conditions, that's when you're talking about the terms of the loan, the rate, and if you've completed the first 4 C's very well, then it's going to be favorable. And if you've leveraged the first 4 C's in such a way that are just, your credit score is high, you have a really good involvement in the community, you have capital put into it, then your conditions of this loan are going to be favorable, and you're going to maximize your probability of actually getting this loan approved. And a part of the conditions as well is we'll typically ask for the W-2s like following. So say you get the loan disbursement and you're doing your business and you're making money, and at the end of each year, at the end of each fiscal year, lenders will typically request that you give your tax information because we want to see that your projections match what you're actually doing now. So that's also a part of conditions that we at our CDFI require. And there's my contact information if you ever want to reach me. I'm currently a management trainee with Community First Fund. I've been with Ken for about a month and a half now, going on all the calls, seeing the life of the lender. It's been interesting, but it's been really fun. And yeah, I hope to do exactly what he's doing at some point. But yeah, you can add anything you want.
Yeah, just a couple quick points. Thank you. That was a great job, Khalif. Appreciate that. So I'll touch on the one under conditions. So oftentimes banks and CDFIs, we're going to want to see or get a personal guarantee. So that kind of falls under a combination. It sort of falls under capacity as well as it falls under conditions. So this is something to just make people aware of up front. Personal guarantees, especially with small businesses, I mean, if your company is, much larger, Ford, that's fine. You don't need to guarantee because the company can stand on its own. But at the small business level, the business and the individual are typically one and the same. So if you decide to set up, a separate LLC or S corporation or even C corporation, partnership, all the different legal entities, we're going to say, okay, so, John Smith LLC, we want John Smith to also personally guarantee that loan. So it's pretty common, it's not unusual. I will say that, again, if it's a startup, we may also ask for your spouse to guarantee that loan. Now, banks cannot legally, because of Regulation B, ask for your spouse. Because we're a nonprofit, we're not regulated by the OCC or the FDIC, so we have a little bit more freedom. And I'm going to just tell you 99.9% of the time, we will ask for your spouse to guarantee. And the reason is, if we don't, and the loan goes bad, you can transfer your assets over to your spouse at no cost and no recourse for the financial institution to then come back and say, hey, wait, you did this just to avoid having to pay the loan. If you were to try to do that and pass it on to your kids, the court will come in and say, no, you can't do that, and they'll take it back so that we can get paid. But you could transfer your assets to your spouse without any issue or for us. So I like to let people know that right up front, that if they're going to come and ask for money, chances are, if you're married, we're going to require that the spouse also guarantee. So just like to throw that out. And then the second thing, he touched on it briefly, but the projections is really important, especially for a startup business. And that's why working with Linda or working with SCORE what we don't want to see is you to say, I'm going to make $500,000 profit from my daycare center by year 2. I mean, that's just unrealistic.
But it happens.
But we see that. It does. It comes in and we're like, well, wait a minute, you'd have to have 900 kids 24 hours a day to make that kind of money. So we want you to be realistic. And realistic might mean that first year you're telling us you're going to probably have a loss. That's okay. We understand. Now we're going to say, okay, so how are you going to cover that shortfall? And that shortfall might be from your outside job that you're retaining, or it might come from, some other cash that you have, already set aside for that. But we want you to be realistic about those projections, because that way we know that you've done your research, you spent the time and thought into what you believe your business can do, and then we feel comfortable that, hey, this individual knows what they're doing, they have a grasp on what their cost for their product's going to be, what they believe they can sell it for, what all their overhead expenses are going to be, and at the end of the day, how much money they're going to be able to take home or to pay back the loan that we've provided. So those are really the only other things that I wanted to elaborate a little bit more on, but I'll reach back out and say, does anybody have any questions now regarding what we've Khalif shared with you here on how institutions take a look at the 5 C's of credit? Yes, ma'am.
How long does a meeting take to get approved? How
So-
is the process?
So the process is, once you contact us, like I said, I have some business cards back there by the snacks, or our website. But once you contact us, we'll get out an application to you, usually electronically. We'll send you an application, or you can visit our website and there's an application lead form that you can fill out there. From there, typically we'll try to get together for a meeting, and we'll let you know what we need you to bring, like copies of your personal tax returns for the past couple years, your business plan, things along those lines. Once we have all that information, our turnaround time is usually about 3 to 4 weeks to get that approved. Then from there, it depends. If it's a working capital loan and you're just looking for some money, or you're buying, say, an auto, you have a truck towing company and you're looking to buy a tow truck, that can be closed within probably a week after the approval. If there's real estate involved, then we're going to need to get an appraisal. We might need to get title insurance. Might need to have some type of an environmental done on the property. Now you're adding another 4 to 6 weeks on that to actually close the loan. But our turnaround time from having a loan applied for to getting an approval from us, maybe subject to that appraisal, is about 3 to 4 weeks. Maybe a little slower in the summer because a lot of people go on vacations and we don't have that 55,000 employee staff like a PNC does. So if someone's gone, things might shut down for a little bit in a certain area. So just to give you a general idea. Any other questions? Okay, well, thank you for coming in and listening.
Okay, so now that we've overwhelmed you a little bit, oh, so you heard like 501 and all these different numbers. We have no idea what that means, right? So, everyone in the room that spoke to you, or will have all the contact information the next day or so to you, all of us have a different piece of this. Please ask the questions. You don't need to go this on your own. I don't think we talked about lines of credit that could be available from Community First Fund. Is that?
Well, I mentioned we have lines.
Okay.
I mean, there, but there's nothing
So that would be like
special or
a
specific.
smaller access to capital for the emergency. I wrote a check and payroll's not covered this week. So I feel like that's something small businesses all really need to have access to.
I will ask this question, and because I think you talked a little bit about this, or Khalif did, is the difference between the two is if you don't have certain things, do you automatically push somebody to a line of credit versus a loan?
When you say
That's
certain
certain
things,
thing, yeah.
when you say certain
So,
things.
and my job to use the restroom, but you talked about the collateral, not having the collateral. So if somebody comes to you and says that I don't have the collateral to match it, so does that maybe disqualify them from a loan, but you look at a line of credit?
No, not necessarily. I mean, and we wouldn't push you to a line of credit. I mean, a shortfall of collateral would be more than looking to another outside resource like the SBA to provide that guarantee, which in essence is providing that second, because the collateral is really a secondary source of our repayment. So ultimately, we like to be paid, cash. So we give you $1, you give us $1.05 back. That's the interest. So that's really how we want this to work. A lot of people get intimidated or scared by the collateral piece of it, but that's a secondary repayment source. So that's only if you're not making the payments, and not just one, but I'm talking, you're 3-4 payments behind, you're not calling us and telling us why, or things are going really bad, then the collateral provides the financial institution with a security blanket. It's kind of a backup plan, the same way with the guarantees. So by having that guarantee, it allows, it's kind of that secondary source of how we're going to get paid back on the loan. We wouldn't push to a line of credit because actually lines of credit tend to be more risky than term loans are because people will sometimes use the lines more for long-term assets, which really should be a term loan, but because it's so easy to just say, can I get a draw of $5,000 against my line? We do that, but really it should have been a 2 or 3 year repayment, not I'm going to have that money again in 20 days. The lines of credit are typically for you have a contractor, you're like a construction, someone had mentioned, so you're a contractor, you're doing work, you're spending your money to get this property renovated and built, but somebody's going to owe you on the back end. It's going to take them 30 or 45 days to pay you, so you utilize the line of credit, we're paying them, so you're covered now. You're going to pay us a little bit of interest for giving you that, but you're able to make that person happy because they have their money. So that's really more where the lines of credit come in. So the collateral shortfall, we'll look to the SBA, like I said, for some support typically in those situations.
Did you have one more question too, or no?
I was just thinking about the terms, in terms of the year. So if you take out a loan, like over how many years are these loans?
So again, it's a case-by-case basis. We try to match up the loan with the life expectancy of the asset. Mm-hmm. So if you wanted to get, again, I mentioned like a truck or a forklift, some piece of equipment like that, we're going to go like 5 to 7 years. Mm-hmm. If you're buying a piece of real estate, we'll amortize that out 20 years. Now the loan will probably have a 10-year term, but the payments will be stretched out over a 20-year period so that the payments aren't quite so high. But like I said, that's really a case-by-case basis. On startup loans, like the ones where you're trying to get, okay, I need to cover the first 6 months of my rent that I'm going to pay at this facility, and I need to maybe be able to make sure I can cover the first 3 to 4 months of payroll until my cash really starts coming in from the sale of the product that I have. Those loans we typically will do for much shorter, like maybe 12, 18 months, 24 months, something like that.
Sorry to say this again. So, going back to that line of credit, the reason why I ask is because you mentioned construction, but really that's like how my business operates. I might have to pay for everything up front, but then I know I'm getting paid, so I do events or corporate meeting management. So I'm going to get paid, but a lot of times I won't get paid until after the event, but I've had to put, maybe they wanted to get bags or, I'm getting banners, and I've had to put out the money for that. So that, you wouldn't necessarily do a loan for something like that.
No, that would probably be a line of credit.
Okay.
So all the people that spoke today, Solomon, John, and Ken and Cleve, all of them are experts at what they call lending packages, and I didn't actually know what this was before I had my first business loan, but how to get the money for all the different pieces, or the specific way to get money for the type of loan. So that's when it gets really specific, and they might say, okay, the SBA can underwrite this piece. This is equipment. I know right now there's a fund in York County or York City that's just for equipment for restaurants, but it's a very small amount, and so then you'd have a construction loan plus a small loan from this fund for equipment. So again, these people all know the packages and know how to put them together for you. Unfortunately, you do actually have to pay them all back. There is that catch. My background is Subway franchising, and when you spend $250,000 on a store, you have to sell a lot of sandwiches to pay back $250. So 17 years later, sold them all, which is a fancy way of saying unemployed. I have been rejected from dozens of business loans because they wouldn't loan to anyone that was a startup, and they wouldn't loan to any restaurants. Well, we thought we were personally rejected. We didn't know that the national banks wouldn't do a startup and wouldn't do a restaurant. So now Community First Fund will take more risk. They will work with a startup. They will look at restaurants. I didn't know any of this. So again, let's ask a lot of people questions. There's such a thing as a hard inquiry and a soft inquiry for credit applications. So a soft inquiry won't hurt your credit score. But if you put in a complete application, yes, that will hurt your credit score for like 90 days, not forever. It'll make a slight drop in it. So we're not going to have you apply to 10 banks, but you might do at least a meeting with 3 banks and say, or Ken and Khalif, and then figure out where your best fit is. Because all the banks have agendas as well, and it's not the same as yours. And I guess this is the stuff that I learned the hard way 20 years in. So. Yes, ma'am. Sonia, right?
If you did the 3 banks and they pulled all at one time, would it count just one, or is it 3 separate pools?
3. Now, but see, you wouldn't go through the process with 3 applications. You would know before you got to the application. I mean, the application, how many pages is the application? Like 10 or 15 pages. It's not just if you stop by, right? So you'd have an initial meeting and you'd know whether or not they were amenable, right? Or if they had a package that would work for your type of loan, for your type of background. Because Ken mentioned all of this is custom. There's no one size, this is a business loan, you get this much. That's not what happens. Traditionally, they were always 5 years back in my day. I see a lot more business loans that are 10 years now. So the time frame has extended, just like back in the day, car loans were 3 years. Now we see car loans that are 6 years all the time, which, you know, senior citizens like myself think that's a really long time. Yeah, senior citizens, yeah.
And let me reiterate, so if you believe you can get a loan through a bank, this is going to sound crazy and I'm saying this, I want you to go there first. Our organization is really set up to help business owners who can't get traditional bank financing. Because as I mentioned, other than unless you're the city of Harrisburg and our 5% rate, because normally, as we talked, our rates are going to be 2 to 3% higher than the bank. So if you can become bankable, if you're bankable and can go to your credit union, go to the bank you belong to now and get that loan, start there. Then if they say they can't do it, then come to us. Because we're, like I said, we're really a second chance type of organization. We're here to help. We want to help the businesses. We want to get as much money into the hands of business owners that we can. But we don't want to do it and make you pay more than what you would have to if you could go to your existing bank and get that same loan. So please do that first, because the other part is, as I mentioned, we only do the loan, so you still need to have a banking relationship. You've got to be able to have your business deposit account somewhere. You probably will have a corporate credit card. You're going to have, you know, maybe if you have employees, you're going to have payroll accounts, things along those lines. So you need to still have that banking relationship. We're not here to replace banks. Banks are actually our friends. I'm going to say 75% of the referrals that I do for loans come from banks. They know because of my years of working in the banking industry and stuff, and we then go out and do presentations similar to what we're doing here to let the banks know that we exist, so that when they have to say no to somebody, they can say, well, I'm sorry, we can't help you, but here's Ken at Community First Fund, he might be able to assist, because we just can't do it because you're a startup, or because you want to buy an investment property, or because you're a nonprofit organization.
So again, did we cover all the ground? And hopefully you'll all get in touch with me, respond to the email with one question that you didn't find an answer to today, or one more thing that would help with your business, and I'll connect you with the right resource or see if I can answer the question.